Hello there. Structure is the fundamental part of technical analysis. You can sought after all the knowledge in the world, but if you don't have the basic knowledge of the price structure, all your effort might not yield a positive result. In this video, I will share my screen and show you how you can analyze the price structure using the two price structure that we have, which are the internal structure and the external structure. So let's go there now.
Hello, undisputed trader. Here on my board, just like I promised, you can see the price structure that we have here. We have the external structure. These are the external structure, right? These are the external structure. External, right? You understand? External structure. So, and this here, from here to this place is the internal structure. You understand? If you look at the order flow, you discover that this is a bullish order flow. The market is flowing from down to the top. But within the flowing, you can see a counter movement. You understand? You can see a counter movement as well. So in this counter movement now, that is this place, which is the internal structure. The place I'm marking this rectangle, it is the internal structure. You understand? Although we have the price pushing towards the upside, right? Towards the upside, right? But along the way, we have a brief push back towards the downside, you understand? And this gives rise to internal change of character. There's something we call internal change of character. Some people will be like, oh, you should not trade against the trend. But sometimes it depends on the context. If the context is so vividly, like it is so obvious for you that you can capture a counter trade that can give you a good risk to reward ratio, you should go ahead and take it. In this scenario, imagine this is a 4 hour time frame and you are seeing the external structure moving towards the upside, and within the external structure you saw a setup, an internal change of character like this for a 4 hour. You understand? You remember that whatever signal that you see on the 4 hour time frame is actually a signal that is well valid. You understand? So if in a 4 hour time frame you are seeing an internal change of character, you understand, like this place, you should take the trade. Once the trade return to a fair value gap around this zone, you should go ahead and take the trade. You understand? Because it is going to be a valid trade for you. Although you know within yourself that on the long term you are moving towards the upside, because the internal structure have already shown you that, oh, I am moving towards the upside. But within me, you can equally capture a counter trade, right? So when some people say you should not trade against the trend, it all depends the type of the trend, you understand? So if in this context, if you are seeing a trade, if you are seeing a setup like this, you can actually go for that trade, you understand? So let me show you on my chart a real life example here. You can see we have this setup here. We have break of structure. The market, this is Euro USD for context. We have the market, the internal structure, the external structure is moving from this place, you understand? From forming higher highs, higher low, you understand? You understand? Forming higher highs, you understand? Higher low, you understand? And higher highs, you understand? So the market continue printing this level. But within this structure, you can equally find another internal structure there. And this internal structure is located around this place. Let me show you real quick. Look at what the market did. The moment the market reached this level, it has internal change of character, right? This is the internal change of character right here. Let me mark it for you guys so that you can see it very well. So this is the internal change of character. This is the internal change of character. The moment the market breaks this level, you understand, you can actually go for this for the sell. You understand? You actually go for the sell because you see the market breaking, having a change of character. Before now, the market was pushing towards the upside, and all of a sudden, after a liquidity sweep, you see the market after this liquidity sweep, you saw the market pushing towards the downside. So you should of course actually trade this setup, right? Because it is valid and not just anyhow setup. It is all equally forming on the 4 hour time frame. So when you see people telling you that you should not trade against the trend, you should not trade, it depends on the type of the trend you are seeing on the chart. If it is obviously an internal structure forming within an external structure, for instance, a 4 hour time frame, I'm not telling you to go and be using it on the 15-minute time frame. If you want to trade this setup, you can use it. Yes, you can use it on the 15-minute time frame, right? But first, you have to determine your external structure first. Know where the external structure or know where the order flow is pushing towards. If you know where the order flow is pushing towards, you can equally leverage the market and have something for yourself. So this thing work, guys. It works, and if you understand this concept, you are going to be far, far ahead of other people, right? So if you want to learn more and have a robust knowledge of how this thing works, you can join my Telegram community where I'll be helping you guys to understand even better. You understand? You can ask me question one on one. You understand? And we can have more robust knowledge in this technical analysis. So just like I told you guys, the structure remains the fundamental key thing in price action. You want to understand your structure, you want to get hold of your structure. Let me go further and show you that this internal structure is actually a valid internal change of structure. Let me go to 15-minute time frame and show you right there. Let's scroll back, let's move back. You understand? Let's move further back. I cannot use, don't worry. But just like I told you guys, it is still the same thing. Like, let me use 1 hour time frame. Let's see. Let's use 1 hour time frame. So this is 1 hour time frame, right? So this is 1 hour time frame. What can you see? This is actually a valid internal change of character. You understand? Look at this place. The market was moving towards the upside, breaking structure, moving towards the upside. Along this place, now instead of pushing towards the upside, forming and printing another highs, it printed a lower high around this place. This was the lower high the market printed right here. Lower high. Instead of pushing aggressively towards the upside, the market did something like this, printed a lower high and continued breaking structure. So it broke this structure, changing into internal structure. So once the internal structure is confirmed, you want to wait for the price to return to this, any of this fair value gap, right? Any of this other block or this rejection block. You understand? Look at this rejection block here. So the moment the market tap into it, you can go for your sell. You understand? Go to 15-minute time frame and go for your sell and ride the market towards this level. You understand? So this is how to create the internal change of character or internal structure within an external structure. So when some people are telling you, oh, don't trade against the trend, don't trade, it depends on the context, and you have seen the context live today. So you should know the first thing you should do on your chart is to first develop the map out the market structure, the external structure first thing. You understand? The moment you come to your chart, ask your question, ask yourself this question: where is the market flowing to externally, in the external structure? Where is the external structure? Where is the order flow? Once you can answer this question, you are far, far ahead of the major players in the market. Thank you. Peace out for now.